We heard from Matty de Groot at the Stock Exchange, who told us how the Aussie stock market responded to the carnage on Wall Street and elsewhere. Well, it's dropped 4% so far today, far from good. It was economic carnage overnight. Wall Street saw its biggest drop since the GFC. The Dow dropped 500 points. That's 4.5%, losing all the economic gains the US made this year. Now, what's a bit scarier is that came as the US arrived at an agreement earlier in the week, as you know, to raise their debt ceiling, essentially allowing them to borrow more money. Now, they were hoping it would lead to a vote of confidence, but the market today is a pretty clear indicator confidence in the United States isn't all that high, and it's certainly not elsewhere in the world, in fact, everywhere in the world. What does it mean for the global economy and for us? Dr. Chris Leithner is a finance commentator and also runs a private investment firm, and he's in the game and joins me on the line. G'day, Chris.
Hello, how are you, Tim?
Pretty grim.
It is. It seems to me the world is kicking and screaming, being dragged into the reality. We simply cannot borrow and spend our way to prosperity. We can only save and invest our way to prosperity.
Yeah. Well, if you can't borrow your way to prosperity, why have the Americans increased their debt ceiling by $3 trillion?
Well, people have been sold a pup. Politicians have said to people, we're going to pay your pension, we're going to pay medical sorts of expenses. They've made promises to people which in the decades to come, they're simply not going to be able to fulfill. In the short term, meaning a couple of years, they can play games with debt ceilings, but as the reality sinks in and people realize they're simply not going to get 100 cents on the dollar for their benefits, it seems to me living standards would stagnate and people realize, gee, we have to take care of ourselves. We simply cannot rely upon governments and the false promises that politicians have made.
You know, I heard Craig James from CommSec this morning saying today is pretty much about panic, what we've seen on world markets and our own. Is that what you think's behind it?
I don't think it's panic. Again, I think it's a slow realization that there are real problems in the world. You can't sweep private debt under the rug, under the skirts of government, and somehow expect governments to be exempt from the laws of economics, from the laws of savings and investment, and so on. There were bankrupt individuals. We now have bankrupt governments, and we're left not just with the same old problems of a couple of years ago, but even bigger problems. It's not that there's a double dip that's possibly on the horizon. It's the same old dip, but coming back in a bigger form because governments have borrowed and spent madly over the past couple of 3 years and have made problems even bigger.
Yeah. Look, are we seeing something more permanent here with the United States? Can they ever recover economically from this disaster they're in?
Well, they've had troubles in the past. It's simply false to say that the United States has never defaulted before. They defaulted on Revolutionary War debt, they defaulted on Civil War debt, and they defaulted in effect during the Great Depression. So because there are precedents to this, I hope that the answer to your question is yes. But the critical point, it seems to me, it takes a mindset, a fundamental change of mindset, not to borrow and spend, for governments to realize that they have made drastic mistakes. It's a bit like going to an AA meeting and saying, look, I am Fred Bloggs and I'm an alcoholic. That's the first step to recovery. Politicians have to stand up and say to the general public, we in effect have made promises which we can't keep. We have said to you, you can borrow and spend your way into prosperity, and we as governments allegedly can do the same thing. That's simply not true. And so this process then of retrenchment, recognizing bad debts, liquidating it, and starting again. So I'm hopeful in that sense. I think the answer to your question is yes, but it's going to take really a 180-degree change of mindset.
All right, our Treasurer is busy trying to hose the whole thing down today, saying that fundamentally we're strong, and I suppose we are. We have safe, secure banks, all of that. But in local terms, we've got our stock market down 4% already today. What will it mean for us?
Well, let's remember that it's true that the Commonwealth government has not indebted itself nearly to the same extent that the US government and other European governments have, but take the debts of Australian households plus the debts of local state governments plus the Commonwealth. We've got a lot of debt in Australia as well. In other words, we're not exempt from these sorts of developments around the world. Real, genuine savings are in short supply. How do you encourage people to save? Well, one is to frighten them if they become frightened of losing their jobs and so on. Secondly, higher rates of interest, higher term deposit rates and so on. So again, we have valuable dirt, at least for the moment, as the Chinese see it. 10 years ago, nobody wanted our dirt. In another 10 years, who knows? So my answer to your question is, well, yes, we have some strengths. We mustn't overestimate them. And just as the Americans have to think long and hard about getting themselves towards a savings culture, so too do Australians.
All right. Now, inflation and interest rates, in hindsight's a terrific thing. Reserve Bank didn't increase interest rates on Tuesday. Damn good job they didn't.
The Reserve Bank are the authors of many of our misfortunes. We talk long and hard about competition, and yet there's a monopolist in this country which sets a single rate of interest. That's very odd in an economy which allegedly has lots of competition and which competition is desirable and so on. What they've done, they have artificially depressed rates of interest over the past 10 or more years. That's encouraged people to borrow far too much to get themselves into trouble with debt. That, in a nutshell, is what's happened in Europe and America. And once again, we're simply not immune from those sorts of developments.
All right. Thanks very much, Chris. Good to talk to you.
Great pleasure.
Dr. Chris Leithner, a finance commentator and operates a private financial firm.